And so the way that I kind of describe Bitcoin is that technology's finally progressed enough where we now have very fast settlement in addition to transactions. So we've enjoyed fast transactions for a long time, but no way to finally settle value, like other than very slowly. And now we finally have the ability to do that within minutes or in some cases seconds, depending on a higher layer of the technology. And so Bitcoin represents a way to run a ledger that has trust in it, that there's reasons to expect that its attributes to remain fairly consistent over time, despite the fact that there's no single entity running it. It's a way to coordinate multiple entities to settle value, to recognize a shared ledger.
In the electrifying atmosphere of a crypto market buzzing with excitement, investment strategist Lyn Alden took the stage to unveil her insights into Bitcoin's extraordinary ascent. She pinpointed the introduction of US spot ETFs as the pivotal factor igniting a surge in demand, propelling prices to unprecedented heights and sparking an investor frenzy like never before. This bullish rally is not just another price spike. It represents a fundamental transformation, solidifying Bitcoin's role as a cornerstone of modern financial technology. Recent price consolidation has only bolstered confidence, with key metrics such as realized price reflecting a growing conviction in Bitcoin's intrinsic value. No longer merely a speculative asset, Bitcoin has emerged as a dual powerhouse, a dependable store of value and a transformative medium of exchange reshaping the financial world. This isn't just a market cycle, it's a revolution. Bitcoin's potential to upend traditional financial frameworks is accelerating, presenting a vision of economic sovereignty that challenges legacy systems. The ongoing rally is a bold declaration. Bitcoin isn't just the future of finance, it's actively redefining it in real time.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
As far as Bitcoin's concerned, I've been in the camp writing that I think it's more likely to break up out of this consolidation that it's been in rather than break down. And there's a number of reasons why. I think what happened was that the launch of the spot ETFs in the US earlier this year kind of pulled forward some demand. There was that period in the springtime where the price just went vertical and people got very euphoric. And I think it took time for the market to kind of digest that. Some of the initial euphoria wore off. We kind of went sideways. If you look at things like on-chain cost basis, like realized price, that was inching up the whole time during the entire consolidation, which is healthy. It basically means that more Bitcoin was trading hands at these higher price points and kind of setting a higher foundation. So I think that the breakout is healthy. I think I think it happened at the right time. I think this kind of resumes the bull market that we were in maybe before, that we pulled forward some of that bull market. I don't like anyone else. I don't know if we're going to retest the breakout area or not. I don't really follow too much the day-to-day price action. But I think it's a healthy bull market to kind of enter. And I'm generally bullish for the rest of this year and then kind of next year. If the United States just came out and said, hey, we're going to do a strategic reserve, then that's going to affect the price compared to that not happening, or any other sizable country for that matter. Right now we have rather small countries that use it in their sovereign reserve. So El Salvador, the Kingdom of Bhutan, any number of dozens of fairly large countries, if they were to come out and do this, they're less likely to do it. But if they were, that can kind of change price forecasts. I generally view more structure that Bitcoin is kind of working its way up the monetization route. So it goes from collectible to kind of niche medium of exchange. Like, for example, when WikiLeaks lost all their payment rails back in like 2011, that was one of the first kind of tangible use cases of Bitcoin. I think it was 2010 actually, but basically it was like let's send Bitcoin if you want to donate rather than these other methods, because they were shut down, and it became this like backup option. Then of course as it's limited by its supply cap, so it became more interesting to long-term holders and investors. And there's kind of a liquidity limit. So when Bitcoin was fairly small, where a handful of wealthy people, if they want to buy it, they end up moving the price. Mm-hmm. That there was liquidity limitations for what institutions could do with the asset. And so it kind of had to reach certain levels of adoption before it even gets on their radar in any serious way. And I think now we're entering that it's a large and liquid enough market that major institutions and then to some extent sovereigns can potentially view it as an asset that they could hold or that is of relevance to them, good or bad. There are some institutions that are like, kind of worried about it, and there are others that are like, hey, maybe this is something we can invest in now. It can be useful for us. So I do think that it's reaching that level where it's more in the conversation now. Another thing that I kind of point out is that even though Bitcoin has had multiple cycles of highs, like higher highs and higher lows along the way, most people didn't see the early ones. And most people don't look at the logarithmic Bitcoin price chart. And so for a lot of people, Bitcoin always looks like it's in a bubble or it's a broken bubble. They kind of look at the linear price chart. They only see the last cycle or two. I think when they personally see 3 higher highs, they start to realize that this isn't going away. So the 2017 cycle was kind of the first like big public awareness cycle. Then the 2020 2021 was a second cycle that was pretty mass known, and this is the third one. This is a higher high since those kind of is the third kind of public cycle of getting higher highs, and I think that's relevant. I think when people see it firsthand that this is they keep ignoring it and it keeps going higher. I think people start to take it more seriously.
Lyn Alden predicts that Bitcoin is poised to break out of its consolidation phase, driven by key factors like the introduction of US spot ETFs, which fueled a surge in demand earlier this year. Following a rapid price increase and subsequent consolidation, metrics such as realized price point to a more robust foundation. Alden views this breakout as a positive development, signaling the resumption of a bull market. She highlights Bitcoin's evolution from a collectible to a niche medium of exchange, bolstered by its capped supply and rising institutional interest. With increasing liquidity, Bitcoin has become a viable asset for both institutional investors and even some sovereign entities. Despite ongoing skepticism, Bitcoin's ability to cycle through higher highs and higher lows demonstrates its resilience, with the current cycle affirming its long-term significance. Alden also describes Bitcoin as a groundbreaking technological innovation that enables fast settlements and transactions, addressing critical gaps in financial systems. Its role as a decentralized ledger with built-in trust allows coordination among multiple parties without relying on a central authority. Let's dive into more highlights from the interview.
And so the way that I kind of describe Bitcoin is that technology's finally progressed enough where we now have very fast settlement in addition to transactions. So we've enjoyed fast transactions for a long time, but no way to finally settle value, like other than very slowly. And now we finally have the ability to do that within minutes or in some cases seconds, depending on a higher layer of the technology. And so Bitcoin represents a way to run a ledger that has trust in it, there's reasons to expect that its attributes to remain fairly consistent over time, despite the fact that there's no single entity running it. It's a way to coordinate multiple entities to settle value, to recognize a shared ledger. And I view it as kind of like we've kind of progressed past the point where centrally controlled ledgers are kind of the best way to solve something. And that now we have Bitcoin. Governments and central banks are not a monolith. They consist of multiple people. And so I think that while there will be individuals in governments and central banks that are interested in the technology, that most will not be. Because few people ever want to give up their own power, right? I mean, for a long time, the central bank's position is basically trust us. Like, we're the ones running the ledger. You can trust us. The trust is often broken. And now there's technology and other ways of that people can choose to trust instead, and that they have more self-verification over and more self-autonomy over. And government right now around the world is kind of based on the idea that if they run deficits or their bond market has a problem, well, they have a central bank. They can just kind of print more units and fix the problem. And kind of spread that debasement out more invisibly among people that hold their money. And that's not something that I think entities are quick to let loose, that they're more likely to fight to retain it. Even though there are individuals, usually minority voices within governments that come out and say, I think this is good. I think we should, so there are people in government that are saying, let's go back on a gold standard, or let's embrace Bitcoin. But those tend to be the non-majority view in a lot of cases, and I think that's probably going to continue for a while. And I also think that even as countries embrace Bitcoin in some ways, like for example, a sovereign reserve or something, I've generally been of the view that governments are going to be anti-privacy for quite a while, because ever since the modern era, they shifted a lot toward income taxes. That kind of requires surveillance to make sense. So back in the older days before income taxes, there were different types of taxes because even if you were a king and you had all sorts of grandiose views of what you should control, you wouldn't even think that you could monitor everyone's income and take a certain percentage. Like too many transactions were inherently private for that to be a workable thing. And so taxes were done in other ways. But in the modern era where everybody has a bank account, and it's all kind of centralized and surveilled, we shifted more toward income taxes, and private transactions kind of bring us back to like a faster version of an earlier age. And I think that's where they're going to keep pushing back on, because I think they're going to say, well, okay, you can hold Bitcoin, but we'd prefer to be in these walled gardens that we can see. And I think that they're going to probably be enemies of financial privacy for quite a while.
Bitcoin has reached a historic milestone, nearing $100,000, driven by reports of Donald Trump's social media company, Trump Media and Technology Group, negotiating the acquisition of Bringt, a cryptocurrency trading firm. This development has heightened expectations for a more crypto-friendly administration, fueling optimism among investors. Since the November 5 U.S. presidential election, Bitcoin has surged over 40%, reflecting growing confidence in its regulatory future. The acquisition, backed by Intercontinental Exchange, highlights the increasing intersection of traditional financial institutions and digital assets, with $4.2 billion flowing into Bitcoin exchange-traded products since Trump's victory. Further momentum has come from the launch of options trading on BlackRock's Bitcoin ETF, which achieved high trading volumes and a bullish call-to-put ratio. Bitcoin's rise is credited to its unique status as decentralized electronic cash, often compared to digital gold, thanks to its capped supply and resilience. The cryptocurrency market has now surpassed a $3 trillion valuation, signaling growing investor confidence in Bitcoin's ability to challenge traditional financial systems. Innovations like Layer 2 solutions and lower transaction fees further cement Bitcoin's position as a transformative force. As the regulatory and technological landscapes evolve, Bitcoin continues to redefine the global financial ecosystem. Its increasing integration into institutional portfolios and even sovereign reserves sparks discussions about its long-term role in reshaping finance. Could Bitcoin's trajectory rival that of physical gold, or will it pave an entirely new path? Share your thoughts on its potential to shape the future of finance. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.